So, hello and welcome to the Icons of Relocation podcast. And I'm your host, Simon Johnston. Today, we're going to be talking about the UK rental housing market. And to help us do this, I'm delighted to be joined by Matthew Salvidge from Savills. Now, for those who don't know Savills, they are perhaps the leading letting agents and sales agents in the UK, and also a company that we have worked with for many, many, many years. So, thank you, Matthew, for being here. How are you?
I'm very well, thank you. Thank you so much for having me.
Oh, it's an absolute pleasure. Now, perhaps to start this off, you could just give us a little bit of background about how you entered the property industry, career path, and your current role at Savills.
Sure, absolutely. Well, as a graduate, I qualified in marketing and advertising, so not really anything to do with property, from the University of Hull, having not really made it as a footballer. So had to choose a career path. Wasn't really sure what I wanted to do. Moved down to London to find work, and it was actually Foxtons, so the very well-known agency who had a
Well,
graduate program, wowed me with their advertising. And I joined them and went into their corporate services team back in, so that was 2006. So it was a relatively fledgling team at that point. Did 3.5 years there, learnt all about relocation, got quite a thick skin as well, and then moved to Marsh and Parsons to run their team, who were smaller. They were primarily West London at that point,
yeah.
slightly bigger now. Did 2 years there, and then Savills asked me to come across and relaunch their corporate services team. So that was 10 years ago now, and a very feels like a very quick 10 years because a lot has happened in that time. And yeah, so I run the corporate services team, which is essentially dealing with all our relocation agent partners that we work with very closely, assisting with the home search side of the relocation, and also working with certain firms directly that don't have relocation providers. So that's quite niche industry, should we say, where the volumes aren't quite as large. So quite well versed in the relocation world, I think, and I also sit on the lettings board for the Savills lettings division, so I have good exposure to the wider lettings business as well.
Well, fantastic. Okay, well, clearly we're talking to the right person, Matthew. So, thank you
Hope
for your background. Now, I think it's probably fair to say the UK housing market has seen some extraordinary changes in the last year or so. Could you just help us and walk us through what those changes are? But perhaps more importantly, how did we get here?
Yeah, I mean, it's certainly been turbulent, for want of a better word, over the last couple of years, and clearly one of the major factors has been the pandemic. Prior to the pandemic, we had Brexit to deal with. Clearly, we did think that Brexit was going to have a bigger effect than it actually ended up having, which was pleasing for everybody. So relatively straightforward. We did have some issues in the sales market with respects to tax relief for mortgages, tax relief for landlords with rental payments, etc., that changed significantly. And we started to see pre-pandemic the introduction of quite heavy legislation on the lettings market, a lot of which added quite a lot of costs to landlords, where yields weren't particularly fantastic anyway. So cutting into the profitability of being a landlord was something that was happening quite a lot prior to the pandemic. And then when the pandemic hit, we saw a couple of things happen, really. One, obviously, a very sharp stop to global mobility and international movement. So a lot of cut in demand. For landlords who own properties in urban centres, we saw quite a big shift of people moving out of those locations to more rural or suburban or countryside locations where they could get a little bit more space because they were so worried about being locked in a flat, understandably, without outside space, etc., during things like lockdowns. And we also saw at the same time we had a sales market that was booming with prices growing, incredible demand for what we thought was going to be quite a short period with the stamp duty relief that was offered to encourage purchasing and encourage transactions, which certainly did the trick. But the demand continued. And a lot of our landlords at the time did actually think, well, okay, I'm getting quite a lot more cost placed on me. Actually, it looks like I can probably achieve quite a good sales price for my property right now in this market. So let's test the market. And lo and behold, a lot of them did sell. So throughout sort of 2020, we're in quite a strange market because that was happening. But at the same time, we had urban locations where we still had quite a lot of available property because not only the demand wasn't really there, but also we had quite a lot of property enter the market from the short let market, which from a travel perspective was hampered quite badly by the pandemic. So they thought, let's get into the long let market, let's bring our properties to that market and see whether we can find a long-term tenant and just ride this out. So that came. So we had quite a strange divergence between the urban and the country markets. So the country markets were incredibly swamped with demand. Stock was getting taken quite quickly, and they were quickly running out of available property, whereas the urban markets were seeing the opposite. So prices were taking
prices increasing in the country locations. And were you seeing any sort of decrease in prices in the sort of the city locations, or was it just that there was stock there where there wasn't outside?
Yeah, a bit of both. So we did start to see landlords take offers that were well below the asking prices, which were resetting the market somewhat. We did, I mean, prior to the pandemic, for example, we were looking at prices that were about 1.2% below the sort of peak. So relatively small drops. And then as the markets recovered, we saw a bit of a shift in that again. So things changed once more. We still had that huge demand for properties with more space because there was still that underlying uncertainty about what was going to happen with lockdowns, etc. But we did start to see people coming back into urban locations. So as offices started to reopen in 2021, late 2020, but more through 2021 really, people thinking, right, okay, I probably need to reestablish myself back a little bit closer to my office. So from a commuting perspective, etc., we started to see people come back. Then the student market picked up as well, as people started returning, and the short let market picked up. So lo and behold, a lot of that property went back. So all of a sudden, the urban locations were left in a position towards the second half of 2021 where the properties were disappearing fast. Demand was increasing significantly. Properties were leaving the market. Current tenants that were in situ were renewing their tenancies because they thought, I don't really want to go and play in this market. I'd rather secure myself this tenancy. And it left us incredibly short of properties. I mean, record shortages that we'd never seen before, really. Which is quite
really interesting. Just sorry to interrupt you there, but it's really interesting you said that. So you're saying that a lot of tenants weren't moving because they realised that actually staying where they are was incredibly sensible. So you have this extra dimension outside of that. You didn't have this sort of natural generational stock that was coming to a bit of a halt as well.
Yeah, absolutely. So it's a perfect storm from that perspective, really, of effects that were creating this market of very, very large demand as things reopened. I mean, as you will know very well, the corporate market picked up heavily and quickly, and I believe there's a lot of pent-up demand from the previous year as well that was trying to come through. Students were back and desperate to get back into their, desperate not to be at home and studying virtually, along with everybody else. The typical market that we would see for any time of year, the sort of try before you buyers in suburban locations, or people that were testing out where they wanted to live before they committed to a purchase, and all the other tenants were still there, or all the other applicants, should I say, were still there. So huge demand, unprecedented demand. In some cases, we were looking at 50% more demand than we were seeing in the same months and weeks as 2019. And stock was less than
50%.
half.
I mean, that just takes a second just to get that on board. I mean, that is a dramatic difference, isn't it, over a course of less than sort of 2 years?
Yeah, absolutely. And it was, I believe it was just the release of people, both from an international mobility perspective and domestically, who could just they could move, so they were going to. And yeah, it just created a real issue on the ground from their perspective, really, because there was huge competition for property. So we were seeing multiple bids on properties. We were seeing properties going significantly over the asking price because of final bids, etc., to secure them. And it was, it was a difficult situation for applicants. And unfortunately, in urban locations, certainly that's something that we're seeing continue to this day.
So when we talk about urban locations, are we talking about sort of pretty much most of London, or are we talking about those prime locations of London? Is there a difference between sort of the areas that perhaps are the epicenter for this conversation, that when people are relocating into London or any major city you'll focus on, or are you seeing this as sort of a universal truth?
unfortunately universal truth. There are subtle differences, but generally speaking, yeah, universal truth. And you see it with, for example, we have worked closely with the Canary Wharf Group, who recently launched, well, I say recently, 18 months or so ago now, launched huge buildings in Canary Wharf for the first time that were build to rent, so specific rental buildings. And as soon as things opened up, like we've just talked about, the lettings went through the roof to a point where I think it was potentially September last year where they literally said we can't handle any more move-ins this month because it was overwhelming. So they had to just hold off because the demand was so strong. And we saw another urban location, for example, similar sort of time throughout 2021 in Manchester. Another build to rent, so specific rental building was launched. The first phase, I think it was 120 units that they had, all of which let off plan. So let before they actually completed.
Actually, I was going to ask you something else, but just picking up on this sort of build to rent, and this is a relatively new concept for those who are not familiar with it. Could you just explore that quickly and explain what that means and what's happening in that area?
Of course, yeah. I mean, traditionally, we're all used to developers building large buildings with excellent facilities, but normally for sale. And a relatively recent phenomenon in the UK, something that globally is probably more common, but in the UK it hasn't been, is developers building purely rental buildings. So they're not selling them, they're holding on to them and building them for rental purposes. So they come with real benefits, such as the facilities that sort of I alluded to earlier, and that might be anything from having gyms to on-site working areas. So they might have communal working spaces with Wi-Fi throughout the building, etc. So people can technically work from home and they have dedicated spaces to do so. To things like having yoga instructors come in and give classes. To often the ethos behind a lot of it is they want to really create a community as well to attract tenants and retain tenants as well. So they do offer a really, really nice lifestyle and an ease of living in many ways as well, with the security that comes with that. So really, they can be quite appealing to a lot of people. But
yeah, hugely appealing.
Yeah, absolutely.
But at the same time, I imagine they're not plentiful at the moment, because that will take quite some time for these developments to really sort of ratchet up and sort of come onto the market. So,
yes.
Relatively speaking, quite modest, would you say, at the moment, as a sort of percentage of the stock?
Yes, absolutely. The pipeline is very strong, but of course we have all sorts of delays with construction, etc. at the moment. Legacy delays over the pandemic and Brexit that will probably extend those pipelines, but there is appetite for institutional investment to get involved in this arena, and I do believe it will get bigger and bigger. But yeah, Simon, you're completely right. It's not there yet, and it will take time to grow.
It's one to watch, isn't it? It's an interesting development from the UK perspective. So this sort of kind of leads on to a sort of a fairly maybe obvious question: is that for those relocating, or for those in the HR teams looking to relocate somebody to the UK, what does this mean for them and for the assignees? And is there any sort of advice you can maybe offer to HR or the assignees who are preparing to move here?
Yeah, I think it's almost like the Boy Scout thing: be prepared, be prepared. Well, how do you do that? It's still intensely competitive. Prices. I mean, to give you an example, so over 2021, the London market grew by about 6.1%. The suburban, we call it the commuter zone, so that would be areas in Surrey, for example, places like that where the more family houses, they grew by 8.3% last year. So
8.3.
8.3.
So isn't that interesting? Sort of intervene that actually the sort of the home counties, if you like, these are the counties that border onto London, they grew at a rate faster than the London markets, which is, again, you and I might be aware of that, but from an outsider's perspective, that's quite a surprise, isn't it?
It is, yeah, and it's down to the that initial surge of people moving out right at the beginning of the pandemic, which really got rid of a lot of available property and tightened the availability. And of course, the demand out there is consistently strong, but one of the things that drives it is schooling. So sometimes that's almost a necessity, and people, I absolutely want my children to go to this school, so I have to find something in the vicinity, and that's a challenge, and has been a challenge because of the lack of availability in those locations.
Yeah.
The good news is that in those locations, we're seeing now more what we call pitching. So for the first time in a long time, our pitching numbers, which is essentially the times that my colleagues will go in and speak to landlords about bringing their properties onto the market, are now higher than they have been in a really long time. So we would expect that to develop a pipeline that comes through in the next few months. So hopefully we'll ease things slightly. We're seeing a slight increase in London and urban locations as well, which will hopefully come to fruition, but it's not as strong, unfortunately, at the moment.
Okay.
So,
that's interesting. So you're saying that the amount of potential properties coming to the market is increasing, but a short while ago you're saying that obviously a lot of landlords left the market.
Yes.
Because of investment. So what are you seeing? Are you seeing that more landlords are then coming back in again? So is there a potential for stock levels overall to increase because of that? Or is there any other dynamics going on that will change the way that we see in the market?
Well, we have to remain hopeful, and we've seen some good indicators. Buy-to-let lending, for example, increasing, which is a good sign, because obviously they will hopefully be the investors that will be bringing those properties to the market as and when they get that funding and finance. But the UK still remains a really good place for people to put their money, and we're still seeing international appetite from investors abroad. And it might not be that they see it as a place that is going to make them a lot of money with, for example, yield and the profitability that might bring. And we're very honest with them, and they understand the legislative costs and the need to maintain the properties and what that will mean to their profits, etc. So they're coming into it with their eyes wide open, but they see it as really strong wealth preservation. So they understand that it's very unlikely that the value of the property is going to go down. In fact, it's probably going to increase, albeit potentially slowly. So they still have that wealth preservation argument to come and invest in property in the UK, and we're seeing that. So it's aligned sometimes with some of the launches of buildings that we have. So the pipeline of new buildings can sometimes correlate quite strongly with the investment that comes in, because a lot of these international buyers like to buy newer build properties. But there are green shoots, and we are seeing good signs. So those two things specifically will hopefully continue to drive property into the market.
Okay, so I'm probably going to be a bit unfair now and say, okay, well that's really interesting. But based on that insight, could you offer some predictions of what you might see over the course of this year, or maybe drifting into early next year, as far as sort of overall stock numbers are going, or what you think might be happening on rent prices?
It's going to be a difficult one to predict. I think rental prices, we have laid some predictions down, which I'm definitely happy to share. And we see a slight slowing in growth in the urban markets for this year. So we think we're probably going to be looking around 4% rental growth in urban markets, certainly in London, for this year. In the commuter zones, we think that is going to be curtailed even more. And we predict only about 0.5% potentially growth, because we're coming from quite a high base, and we do expect there to be more properties in those areas as the year progresses. So the demand and supply issue is going to hopefully ease somewhat. So we do think there'll be a curtailing of rental growth there, which probably leads us to believe, or is because we think stock might be, or available property might be increasing in those areas to make it slightly easier for people coming over. But in terms of the urban centres, it's difficult. There are certain developments that we know are coming, which will ease things, but of course they are in very specific geographical locations. So yes, we might get an easing in a certain location, but that doesn't mean it's going to be across the city or as
that's
a whole.
really interesting, isn't it? So what we're basically saying is you can't take any of the major cities. I mean, I'm talking about London primarily, because that's not obviously a clear epicenter, but it's obviously wider than that. So what we need to do is make sure that we're looking at sort of the key areas here and actually seeing what's going on there, rather than trying to be as your universal truth to say this is what's going across the whole of any of the major cities. So we've got to be really quite focused on our messaging here.
Yeah, absolutely. And going back to that point of advice, the preparation and flexibility as well. So what do I mean by that? Well, I guess lead times are key. It's no longer the case that those last minute moves are going to be absolutely easy to assist in terms of finding accommodation, because we probably need more time at the moment. So the more time someone can give us with respect to their arrival, we can hopefully find them something more suitable. Flexibility with start dates along the same lines there. Can you actually start something a little bit earlier, rather than leaving it later if something's available now, because of course the thing to be aware of is the competition. So let's say, for example, an assignee is coming in and they must have a 6-month break clause and they must have an option to renew. Yet the 4 other people who are interested in the property can offer 2 years straight or a year straight or something like that. It's being aware of those market dynamics that are going to put them, let's say, perhaps down the queue in terms of a landlord's priority when looking at the offers. Prior to this market and prior to the pandemic, landlords were always asking us for corporate tenants. They wanted the best quality tenant for their property. The long-term nature typically of a corporate tenant was something that was hugely favourable. The last 2 years have kind of reset that slightly, and one of the major factors around that is the uncertainty. So is there more flexibility if someone just gives them a year straight and they can reassess and see where they are in a year's time? We're hopefully seeing a bit of a reset now as things normalize once more. So I believe, and what we're seeing on the ground, certainly with respect to the offers we've had agreed in January and February so far this year, that landlords are now resetting a little bit towards, okay, things seem to be settled now, we can look again at those corporate terms and corporate tenants. However, we still need to be very mindful of the competition that's out there and the supply and demand issue. So where there is a possibility to be flexible on terms, I think that's really important. I think then it's about move dates and wish lists. So I would encourage everyone to come in with a vision of what their perfect property is, but be always willing to compromise. And whether that compromise is location, whether the compromise is size, whatever it may be, we will always advise on that, but be willing to compromise and know that the ideal situation might not be out there.
Yeah, no, that's really good advice. There's just one thing I just want to come back on to, because I think it's quite an important issue. You said about sort of lead time. Can you explore that? Because I perceive by that you're talking about the fact that there's a notice period when the previous tenant is vacating, and then that's what you mean by lead time, so don't leave it to the last minute. Could you just explore that quickly, just to explain for anybody who's not familiar on how that contract part of the UK works?
Absolutely. So typically in the UK, either a landlord or a tenant needs to give 2 months' notice to terminate a tenancy. That's if it's within the normal bounds of the tenancy and it hasn't gone beyond, and therefore it would normally be a month or whatever the payment period is. So 2 months is what we normally look at. And then if you consider that landlords obviously want to try and get a tenant in as quickly as possible, we normally say start your search maybe 6 to 8 weeks prior to when you need to move, because at that point we would hope that we'd have the maximum available property on the market for them to see for their start date. Yeah, so that's the simple sort of mechanics.
Makes perfect sense. So it's very last minute. By definition, you're going to be looking at a reduced pool, and perhaps some of the more appealing properties, if that's the right way of putting it, those may have gone earlier. So therefore, the more chance you can give yourself on lead time, the better. So 6 to 8 weeks will be sort of utopia potentially on that regard.
That's what I believe, yeah, and that's what we've seen over it, not just in this market, but generally speaking. That's very good advice. Yeah.
Okay, perfect. All right, so we've got a sense of where it's going. So we think the housing stock will increase, but it will increase marginally as we go through the year, we think, as investors come back in and stock levels. Because certainly in some of the areas outside London, there is a real shortage, especially from our perspective. We have a lot of people coming over, international schools, for example, American schools, in places like Cobham, etc. Those are locations. Stock levels are extraordinarily low, aren't they? So
they really are, yeah.
Reasonably optimistic that might start reversing.
I think yes, we certainly hope so. We're seeing it in like I mentioned earlier, those pitching numbers of getting through the door and seeing properties at the moment. So we are certainly hopeful, and we're also hopeful that the sort of cycle of tenants in those areas will start to normalise as well, because we've had renewals and extensions perhaps that we wouldn't have expected in those areas, where people would have been due to move on to their next posting or their next move, but hadn't. They'd stayed put because of the pandemic, because of the situation. So we're hoping that will normalise, and that cycle of properties just returning to the market organically through the tenancy lengths will start to come in those areas as well. So we're hopeful, but I think the word you used there, I think, Simon, was the sort of gradual increase rather than sudden. So we don't expect it to be anytime soon, but we expect it to gradually increase over the year. Yeah.
Well, fantastic, Matthew. This is extraordinarily helpful and insightful. In fact, I know I haven't actually said this to you, but I think this is something we might have to keep an eye on. So maybe we can come back and see how things are progressing, maybe in a quarter's time, and see whether our sort of views on what's going to happen has proved to be reasonably accurate. But
Yeah.
thank you so much for your time, and thank you for your
Pleasure.
letter to Savills. As I said, Savills are an amazing company to work with, so I really appreciate you giving us that insight.
And likewise,
So
thank you very much.
my pleasure. Thank you so much indeed. So otherwise, I'll speak to you very soon, and thank you everybody for listening to this podcast.
Thank you.
Bye-bye.